We know that over the last few sessions, the NSE All Share has been coming under pressure, drifting perhaps lower, and of course today ending the day off on a negative note, and we're below that key 25,000 level.
Yeah, markets closed lower yesterday again. We saw the stocks of companies in the food and beverage sector do better today. I'm referring to Nestle and Guinness. You'll think that before the year end, of course, the Yuletide season is approaching, and then you expect their volumes and turnover to increase, and then this might have had some positive impact on their level of activity today. Short-term investors or speculators, of course, are taking margin. This has been done continuously in the last 4 or 5 weeks on banking stocks. So you expect them to get out from some positions and then go long on other ones. And I believe this will continue to, start seeing results of banking institutions, year-end results, that I mean. And then that will usually trickle in first, second month of next year, and then you'll see a super bounce in index.
Bankole, let's touch on the bond markets and the debt management office auctioning 3, 7 and 20-year bonds. We've also noticed that 20-year bond yields are starting to rise. We're sitting at around 14.5%. What is driving the rise in yields?
Yeah, it has to do with the general perception of our financial institution of how much the government actually needs. We've got this calendar of bonds to be issued, like portfolio to be, sorry, there are demand that's in funding, and we know that they actually require a lot of capital to carry out a lot of projects. That's for year-end completion of some projects, and then election in first quarter of next year. What they've done in the last month, in the last week, is to reduce the actual volume of bond issue to curtail this general perception that they are willing to borrow at very high yields. Yeah. But this hasn't even stopped what has been happening. It's been the trend in the last 2-3 months, continuous increase on yield, especially on the long term. Of course, it's one major reason is because the bond market is actually a little bit stretched. The volumes were actually increased from 80 billion to 120 monthly issues. So we're beginning to see people take preference to short-term maturities.
Well, Bankole, you know, yeah, the sentiment that I'm getting from you is that perhaps we're going to have an oversupply of bonds. I mean, looking at the fact that the 20-year bond yield is sitting at 14.5%, how much higher can it go? I mean, do you think that 15% is pretty much in sight? Is 16% a reality?
Most definitely we'll be looking at 15, because they'll be reopening another bond that had been issued initially. It's 2028 maturity, and then originally it came out, sorry, it was issued at 15% originally, that's the coupon, and we're seeing it going back there. People are still not very bullish that's going long or buying bonds, because you don't want to buy it at 14.5 and then next month it's being issued by the government at 15. You'll be keeping it at a marginal loss. So what we expect is by next month issue, mid next month, it will certainly get to 15. That's my take.
Bankole, what is it going to do to sentiment regarding the Eurobond? We know that Nigeria is looking to launch that Eurobond relatively soon. Is it going to have an impact on the yields there?
Yes, I will say yes, but marginally though. We know we expect a lot of FDI inflows for that. On the local scene, it's going to be very attractive too. What other factors that would affect that yield of that Eurobond would be the country's ranking and how the elections go. But I mean, it all has to do with timing of when the Eurobond is issued finally and the level of liquidity. But it's going to be very attractive. We expect FDIs to come in bullishly for that.
The naira, of course, has started to stabilize extensively against the greenback. But also, Bankole, on that note, there's also talk of tightening of liquidity. We've had holidays this week, so very much a shortened trading week.
Yes, I'll speak a little bit on naira easing a little bit. What's happened is that we've seen oil companies come to sell quite a huge amount of dollars. So to complement what the CBN issued on Monday, we didn't have the weekly issue for the midweek, sorry, because of the public holidays. But we've seen yesterday that oil companies came to fill that gap. So it's just been a devaluation of 11 kobo in 1 week. As for the money market tightness, federal allocations were actually approved, but for the trade union actions that we had and then the public holidays, these amounts were not disbursed. They've been disbursed yesterday, but what has happened is that the outflows because of foreign exchange sales by the CBN and bond issuance as at yesterday will almost match that amount that has been inflowed by the federal government. So we expect this tightness to continue as from next week, because there will be further T-bills issuance of over 125 billion naira, and then although we expect a 44 billion maturity on T-bills, it gives you a net outflow of about 80 billion. So the system is quite going to be tight.
Bankole, let's touch on the interest rate decision. We've seen inflation ticking down a little bit. We've got interest rates sitting at 6.25%. We had a 25 basis point increase in the previous meeting, so that was a bit of a surprise. Given the fact that inflation has ticked slightly lower, do you think that there's a chance that we could see an interest rate cut? Do you think we could see things unchanged? Or do you think that we could see a surprise move to the upside?
Yeah, we may see marginal increase in interest rates. We call it MPR. The meeting will be held next week, Tuesday, at the Monetary Policy Committee. The reason why I said that is because you could actually lend at as low as 6.25 and then invest into short or long-term government instruments at higher than that, so between 9 and then 14%. So there's a wide gap that institutions or persons could take advantage from. They would consider that. At best, we would see them retaining it at 6.25 or a marginal increase, I would say.